Good afternoon, everyone. And Q2 two-wheeler sales has grown 14% over last year. Scooters 18%, motorcycles grew by 15%, mopeds grew by 5%. Domestic two-wheeler sales during this quarter grew by 11% over last year. Export sales two-wheelers grew by 30%. Three-wheeler sales grew by 57%. Revenue grew by 22% from 4,098 crores to 4,994 crores this quarter. Profit after the underlying PBT for Q2 of last year before the fair valuation gain was 265 crores. The current quarter PBT is 306 crores, therefore represents a growth of 16%. Last year we had 32 crores towards fair valuation of TVS credit shares, consequent to TVS CS becoming a subsidiary of TVSM in September 2017. The fair valuation of such investment is no longer required. EBITDA for this quarter is 8.6. Sequentially, EBITDA has gone up by 90 basis points. Profit after tax for this quarter has grown by 11%. Last year, it was same quarter, it was 190. This year, it is 211. In the board meeting today, we have declared an interim dividend of rupees 2.10 per share, 210%, absorbing a sum of 120.28 crores, including the dividend distribution tax for the year 2018-19. We have a very good portfolio of products. TVS, recently we have launched Jupiter Grande. This is strengthening the Jupiter portfolio. TVS Ntorq 125 and Apache RTR 164 we launched during Q4 of this year, Q4 of last year, and the calendar year 2017-18-19. Excellent response from the customers, and both have crossed 1 lakh sales. Commuter motorcycles was strengthened with the launch of TVS Radeon. The feedback for TVS Radeon is extremely good. We have launched for the season the new Star City Plus and Sport Apache 180. These are the new colors and the new refreshes. Exports continue to grow ahead of the industry, and we will continue to invest in brands and technology. Material cost, there is an upward bias. We are working on cost reduction projects, localization, alternate sourcing, VAVE to mitigate the cost. We took a price 0.6% during the quarter. The third-party insurance increase and the personal accident insurance is definitely putting some pressure on the customers. We have seen that during this time. However, going forward, we are confident that Q3 and Q4, with a very good portfolio what TVS has got, we will continue to grow ahead of the industry, both in international market, domestic market. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is on the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity, sir, and congratulations on a good set of numbers. Sir, my first, before I get to the two questions on the business, just had one clarification on your other income movement between 1Q and 2Q. We see there is a classification, there's a change in the other income and the revenue for 1Q. So if you can just talk about what is that and what nature of that other income reclassification is, and how big is that during this quarter, sir?
Okay. See, this reclassification has been done in line with India's requirements. The interest income arising with the contract with the customers has to be shown as part of revenue from operations. This is the reclassification done. The impact of this for this quarter is 0.2%, and we have done this, we have restated for the previous quarters also for comparison in line with the Ind AS requirements.
0.2%, is it? And this will continue to be in the same line item going forward, as in it will be, yes. It's operational income, basically.
Yes, this is a requirement under the Ind AS now.
Okay. And then my question on the business is pertaining to the domestic demand, and if you can provide some color on how's the season so far for you, because the general feedback on the industry is not so great. And also in context of the fact that demand hasn't been that great at the industry level, how are we positioned on our inventory at the channel level? So is there a bit of a stress at the channel inventory?
The festive season for TVS has been moderate. And we have the best range of products, Moped ES, Jupiter Grande, Radeon, HLX, Ntorq, Apache 160 4V. I think the recent challenges because of the insurance cost increase in the entry level, especially in the entry level two-wheelers, is a little bit affecting. However, if you look at the Diwali season, the major part of the festival season yet to come. So we are pretty confident in terms of very good sales during the season.
So, and how much of the sales of the season is normally skewed towards Diwali, Dhanteras versus, say, Dussehra and the first half? As in, what is the split like broadly?
See, more than 75% comes post Dussehra season.
Okay, most.
Because after Dussehra, there is 10 days, and then Dhanteras and Choti Diwali, it goes like that.
Okay, so there's still some hope for the industry as well then.
Yeah, very good hope is there, because I think initially there are a lot of confusion also because of this insurance. Definitely insurance has gone up, and there has been a lot of confusion also in customers' mind, which is a fair issue, because everything happened from 1st of September, and there was this was because of the third party, and then the accident insurance, it went up, and then we were able to bring it down thanks to IRDAI. We represented, and it has come down to 1 year now. So a bit of confusion happened in the first 2-3 weeks of September. So I think now it is stable, and I think industry should do well, and we will do better than the industry.
And how's the channel inventory for us, sir? Is there a cause of concern, or availability is still a challenge for few models?
Yeah, during season, definitely we will also add little bit of inventory, but we always use the principle of 4 to 5 weeks forward sale. So post-season, that will be the standard.
And the second question is on the performance of TVS credits. There's a lot of concern around the NBFC liquidity position, and and given the fact that ours is an unlisted subsidiary, will be great if you can provide some color on the performance of TVS credit in the quarter gone past, and also how's the business doing in the current uncertainty around access to liquidity for NBFCs. If you can provide color on that, that will be great.
Okay. The book size is growing, and it now stands at 7,000 crores. The PBT for the first half is 88 crores, and PAT is at 61 crores. The TVS Motor Company stake in that company, in TVS Credit Services, is 85%. The TVS Credit caters 50% of the finance for TVS Motor Company two-wheelers. As far as the liquidity is concerned, we are growing, there are no issues we have covered for the season and post-season also, and we don't see there is any concern with regard to the liquidity, and TVS Credit Services is fully in compliance with the RBI norms with regard to the borrowings, and therefore we don't see any great strain or challenge at this point of time.
Thank you, Mr. Kumar. May we request you to join the question queue for any follow-ups, as we have several participants waiting for their turn. Thank you. The next question is from the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Yeah, congrats, sir, for a decent set of margin finally after many quarters. A couple of questions. One, as you said, channel inventory anyhow for you is 4 to 5 weeks. But in states like UP, Bihar, or eastern part of India, what is the state of your dealer inventory presently?
We don't give state-wise or region-wise. As a company, during season, definitely like any other company, we will also add a little bit of stock because during that time, the peak sales happen during Dhanteras, Diwali, a few days before and after. But what I said is on a stable, steady state, we always keep 4 to 5 weeks of forward sales.
So, do you see any possibility of any alarming destocking in the months post Diwali as such?
We are expecting a good growth during Diwali season. I said very clearly, September, first to 3 weeks, we had a lot of confusion. And there was definitely, especially in the entry level, there were issues on this sudden increase in the insurance. It is almost like 8 to 10% of the ex-showroom price. So that creates huge uncertainties in the minds of the consumer. But now that it is stable, we are quite confident that the kind of portfolio what TVS has got with the Jupiter Grande, Radeon, Moped ES, Ntorq and Apache 4V, we are confident that we will grow well.
Sure. And sir, like with exports being almost 20% of your volume and the rupee weakening to almost 73, 74 levels, so what's your hedging position? How will you realize that if you, down the line, if you can describe that?
We will grow because the range of products what we have in two-wheelers is extremely good, and like I said last time also, the stability and increase in the oil prices, stability of the currencies in many of the countries in Africa or many other countries, we find that there is a very good acceptance of our product range. So exports continue to grow for us ahead of the industry, and definitely we don't plan much on the gain from dollars because it can go both ways. So we focus on absolute growth and positive growth in terms of the export.
Yeah, but by when one can see the full impact of present levels getting reflected in your quarterlies?
No, the company has an approved forex policy where we cover the net exposures, and TVS Motor Company is a marginal exporter, and the benefit of the rupee depreciation will be flowed through.
Thank you, Mr. Banerjee. May we request you to join back to the question queue for any follow-ups. Also, ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit a question to 2 per participant. If time permits, you may join the question queue for any follow-ups. Thank you. The next question is from the line of Abhinay Singh from Morgan Stanley. Please go ahead.
Hi, team. Thanks for the opportunity. Congratulations on a good set of numbers. Just wanted a clarification. So you said TVS credit finances around 50% of sales of TVS. Is that correct?
No, again, come back, please.
That you said that TVS credit finances around 50% of the sales of TVS.
No, of the retail finance. See, the retail finance penetration today is around 45%, and TVS Credit Services has a 50% share in that, of that 45% of retail penetration.
Okay, and who will be the other, what will be your overall NBFC share?
So the retail finance penetration of TVS for this quarter is around 43%. And as I said, the credit services share is 46% of that.
Right. And so in a way, the other so in a way, your NBFC as a percentage of sales financed will be quite high. But that's fine. The second question is, when you look at the upcoming 2 years, we have the ABS-CBS transition and then the Bharat Stage 6 transition. Any early indications on what sort of price increase will come because of this?
See, ABS, EBS, if you look at it, many of our products are already, we have changed over. For example, if you look at, there is already an Apache with ABS variant. Okay, if you look at the synchronized braking technology, we have, for example, Jupiter, Vigo, Ntorq, Star City Plus, Sport, Radeon. All of them have got either half or almost 70% we have changed over. So as far as the ABS, SBS technology, it is a smooth transition into before April 2019. Okay, so the focus we need to put it, what we are now trying to do is on BS6. Okay, BS6 at this point of time, proving of the technology is going on all products. And very close to the launch time, we will be able to share what is the cost impact and how we are planning to manage it.
But any early indication, is it going to be like 10% or so of the cost increase, or is it more like early single digit?
Too early to give any kind of indication at this point of time. Closer to launch, I'll share the exact kind of impact.
Right. And just last question, we are entering into the festive season. Typically, we see that the advertising, sales, promotion spend rises during the festive season. So what you are witnessing in Q3, is it in line with seasonality, or are you seeing more requirement to sort of spend per bike on sales promotion? Like, are you seeing cost of acquisition rising, or is it broadly in line with what you budgeted?
I think if you look at the competition point of view, we have seen discounting from some of the competition from Q1. Okay, so they are continuing that. The surprise element was this insurance, whatever I highlighted, because the third-party insurance, the impact, especially in the entry level, is close to 10% of the ex-showroom price. That was a surprise, but it happened in the first week of September. Okay, other than that, there is no surprise we are looking at. Only thing is, because of the fuel, the oil prices being stable and at a little higher level, the material costs may continue to be a little higher in second half.
Yeah, right. And the 0.6% material cost hike that you gave is basically what you took through the year, right? The Q1 and Q2 combined.
Q2. Which one? Can you repeat the question?
Like in your comments, you stated that you've taken a 0.6% price hike.
It was only Q2.
So it's also 0.5 in Q1. So
yeah, correct.
Okay.
Q1 we took about 0.5. Q2 we have taken 0.6. Correct.
Yeah, great. Thanks a lot.
Thank you. Reminder to our participants, you're requested to limit your question to two per participant. Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Yeah, thanks for the opportunity. Sir, first of all, wanted your thoughts on growth for various segments. Where are you seeing slowdown, if at all? Do you think industry growth is likely to be lower than what was your original estimate, or you think will quickly come back to the levels that you were expecting at the start of the year? So if you can give by segments like mopeds, scooters, and motorcycles. And within that also, if you want to, give some thoughts qualitatively on entry and premium segments.
See, if you look at the industry in Q2, we have seen industry grew by almost 11%. Okay, domestic two-wheeler industry. I'm removing the exports. I thought your question is more related to domestic, right?
That's right. Sir.
Yeah. So if you look at the domestic two-wheeler industry, it grew by 11%. Sorry, the industry grew by 5%, which is a little lower than what we expected, definitely. But we grew 11%. Okay, so that was positive. And the area where what we have seen is scooters growing at 2% in Q2. Okay, the quarter one was 12%. So scooters, we are able to see a little lower growth. But these things happen, when you have some competition pricing their entry-level motorcycles at moped prices. Sometimes these things happen. But we are confident, and of course, the third dimension is this higher cost of insurance and the petrol prices. This is definitely affecting the customer sentiment, especially the insurance cost increase during the first week of September, which is directly seen, especially in the entry level. So I am pretty confident, monsoon being close to normal this year, I think rural will pick up, and the major portion of the season is likely to happen in the next 10-15 days. So industry should start growing better in the coming days. Maybe there may be little moderation than what we expected, a couple of points, but may not be significantly. We originally thought the industry will grow around 12%. Maybe it will grow around 10% in the second half. This is for the industry, but we will do much better than the industry growth. We will grow faster. That we are confident because we have very good product range.
Right. This is quite helpful, sir. And within segment, you think scooters could grow slower than the industry growth this year?
I think scooters will come back. I think today, if you look at it, urban is a bit slow, which is seen by other products also, but it will come back because, scooters have been growing close to almost 16 quarters at CAGR of more than 15%. So sometimes 1 or 2 quarters, these things happen. Okay, and the base volumes are also, scooters have gone up substantially. Now 33-34% of the two-wheeler category is also scooter.
Right. And so one question was on financials. Just wanted to check, the rupee depreciation that's taking place. If it stays around the current levels, should we expect that to benefit profitability of exports, or there is some pass on taking place in the export markets as well?
I think export volumes and we will grow ahead of the industry, and it will definitely help profitability of the company to go up.
Strictly referring to rupee.
We are an export company, so definitely it will help. Only thing is, only the challenge
able to retain the benefit.
Yeah, only challenge is the H2. We were all hoping that the material cost will soften. So maybe a little portion of these benefits may be required to be used for the increasing material cost.
Thank you. Mr. Singh, may I request you to join the question queue for any follow-ups? Thank you. The next question is on the line of Jay Mehta from Edelweiss. Please go ahead.
Yeah, Chirag here from Edelweiss. Thanks for the opportunity. So one question on your quarterlies. We generally see a lot of seasonality in your margins, if you look from quarter to quarter. So what is the right way of analyzing the results? Is it on a YOY basis a better way of looking the results, or Q on Q? Why I'm highlighting is that when I look at your quarterly margin, generally Q2 is the best margin, and then we drop off significantly in between somewhere. So is there the cost provisions you make is based on YOY basis, or how should we look at it?
See, it all depends upon when the festival happens. Festival periods are always a good period. Even for the industry, you can look at it. Okay, and if festival falls in fully in Q2, you will see a different result. If it is split between Q2 and Q3, you will see a different result. Otherwise, it is also one important factor we have to look at is when the material costs are higher or expected, or some changes what happens in. For example, last year Q4 we suddenly saw the BCD. Okay, sometimes it all depends upon if there are any change in the budget. So otherwise it is fairly stable.
Yeah, again the expenses are provided based on the incurrence basis. We cannot provide in one quarter and not to provide in the other quarter. That's not the way. As and when the expenses are incurred, that are being provided for.
Yeah, because if I look at from Q1 onwards, our margins have been very reasonably volatile on quarterly basis. Yeah. So second question was any specific that if I look at YOY basis, the margin is still showing some drop from 8.9 to 8.6. So is it largely how should one look at on the annual pressure on profitability?
I think last year the festival was in October, and
yeah. So that's primarily the reason.
Yeah, that is the primary reason. And also, if you compare last year to this year, you know the material cost increases this year and the custom duty increase, which was not there last year.
Yeah. And sir, one last question on three-wheelers on the export market. If you can throw some color, any specific countries or regions that are showing strong growth or potential growth, if you can throw some color over there.
I think Africa is growing. Again, I highlighted the key reason being while oil prices are going up and the currencies are stable, definitely it is very good for many markets in Africa. Africa is growing and we are also growing in Africa, and we are also gaining market share there. If you look at other markets, LATAM is doing well. Asian markets have started now. It was doing extremely well. Now it came down as an industry. Now it is slowly picking up. So overall, three-wheeler, the outlook is going to be positive in Q3 and Q4.
And we can expect a strong double, like 20% kind of a growth from industry perspective or from Indian exporters perspective?
Industry, I think, will continue the same momentum is my belief.
Fair point. This was really helpful, sir, and all the best.
Yeah.
Thank you. The next question is from the line of Sumit Mangal from Goldman Sachs Asset Management. Please go ahead.
Congratulations for great set of numbers, sir. So my question pertains to TVS Credit. So I was looking at the numbers. Our net NPLs have actually gone up from 0.6 to 2.1 in last 2 years, despite our credit costs, which has also gone up from 0.6 to 2.1. Is it because of some accounting change, or the slippage has been much higher than what you were expecting earlier?
No, you're not very clear on the question. Is it on TVS Credit Services you are asking?
Right, sir.
What's the question, please?
So I was in a TVS Credit, if I look at it, our net NPL used to be 0.6 in 2016, has become 2.1 now, despite the fact that the provisioning for those slippages have actually gone up, let's say. So our credit cost in 2016 was 1%, and it was 2.7 in 2008. So is it because we provided nearly 1.7% extra for the credit cost, despite that our NPLs have actually gone up from 0.6 to 2.1? So is it because of some accounting change, or the slippage has been much higher in the books?
No, I think you're asking too much about TVS Credit Services, and I may not be able to answer here those issues now. But the fact is, the delinquency of TVS Credit Services is very much under control. It's lower than the industry norms. That much I can say. And the provisioning is done as per the requirement of the regulations.
Sure, sir. Okay. Thank you, sir.
Thank you. The next question is from the line of Samantha Khan from ICICI Prudential Life Insurance. Please go ahead.
Good afternoon. Thanks a lot for the opportunity. My question is on your raw materials. What percentage of your total raw materials is localized, and how much of it is that you import from outside the country?
Yeah. Sorry. You want to know the import content?
Yeah, import content.
Yeah, the import content is close to 14% now. It will come down. We are taking a lot of initiatives in localization and expanding the capacities here, and some of those suppliers are also investing in India and setting up the facility. So it will come down quarter after quarter.
So by March, and where can this number go down to? You think it can come down to single digit?
Yeah, March end, possibly it will be around 10%, because our volume being very healthy, we have to manage in such a way that, the local capacities are built and they are able to deliver. So this work is going on.
And at current exchange rate, do you think localization can help you improve your, the cost of content?
Absolutely.
Okay, thank you. That's all from my side.
Thank you. The next question is from the line of Ruchit Mehta from SBI Mutual Fund. Please go ahead. Ruchit Mehta, your line is unmuted for questions. You may please go ahead. So it seems there is no response from the line. We'll move to the next question. That is from the line of Jinesh Gandhi from Motilal Oswal Securities. Please go ahead.
Hi, sir. Thanks for taking my question. First question pertains to...
Mr. Gandhi, we are unable to hear you, sir. May I request you to use the handset, please?
Yeah. Hi, can you hear me now?
Yes. Yeah, we can hear you.
Yeah. My question pertains to the retail growth for TVS in first half. What would be?
We don't generally give the retail growth, but all that I can tell you is we keep always the forward stock. Looking at the forward sales, we keep 4 to 5 week stock.
Okay.
During the season time, we little bit increase the stock, but post season again we bring back to 4 to 5 weeks of stock.
Right. Okay. Second question pertains to this other income reclassification. So what would be quantum in crores?
No, it's 0.2% of the EBITDA. It's again, even the earlier quarters are around the same percentage. And this has been done strictly in line with the accounting standard requirements.
Okay, because earlier quarter it was about 15-16 crores, so that would be similar quantum.
Yeah, it'll be around that number, be lower than that even.
Okay. And lastly, other expenses in this quarter has gone, on QOQ basis has remained stable as percentage of sales. And this is despite volumes going up on QOQ basis by about 17%. So, is there a very low level of fixed cost now as compared to in the past?
One second. See, there are cost reduction initiatives as explained by Mr. KNR is very much in place. The fixed cost is reduced by 0.7% in H1 of 18-19 when compared to H1 of 17-18. This is what it is.
No, I'm referring vis-a-vis first quarter. Second quarter also has been stable on other expenses as a percentage of sales, despite volumes being higher by 17%.
This is mainly because of the cost reduction initiatives that are in place now. We are controlling the fixed cost that is getting reflected here.
Okay. We would have expected to be lower given the volumes and operating leverage benefit, but...
Overall, when the volumes go up, we have very clearly said that there will be benefit of scale.
One more reason is the last quarter this was explained, the freight outwards to the dealers, which was part of the other expenses, now that has been adjusted against the revenue as per the accounting standard requirement. That's also the reason.
Okay.
Last quarter itself. It's not a new change.
Right. Yeah, so that should not be... okay, no problem. And lastly, the balance 50% of financing is done by banks or it's mixed between banks and NBFCs?
It's a mix. This is a retail finance, right?
Yeah. It's a mix between banks and NBFCs.
Yeah.
Okay, and would you be having that number? How it splits between banks and NBFCs?
I don't have the numbers.
As of now, we don't have it, but we can give you later.
Yeah, thank you. The next question is from the line of Prateek Poddar from Reliance Mutual Fund. Please go ahead.
Sir, just one question in terms of supply bottlenecks. Given the season and the outlook, are you facing any supply bottlenecks when it comes to demand for, say, new products like Radeon, Ntorq, Apache 164V? Is there any kind of supply bottlenecks, or what kind of investments is needed by your suppliers to ramp up?
See, there are no supplier bottlenecks. See, any new product, we ramp up in line with the retail, what is happening. So in Ntorq, if you look at it in the last few days, we have ramped up to the next level. And we have now reached From about 15,000 per month, now we are coming to closer to 20,000, and it will go to 25,000. So it is a very planned way of ramping up, and there are no bottlenecks. Same way in 164V, that is also getting ramped up without any problem. Radeon, we said we will deliver in the first 2 months 15,000. Now that ramping up is happening. This month we will deliver 15,000. So I think the ramp up and the capacity built up today, I don't think there is any constraints with respect to supplier capacity.
And so just one more question. With respect to our product slate, any more spaces which you think we will need to fill in, or you think this product slate is decent as of now? Just some thoughts on that.
See, customer demand drives the new spaces. So we have to constantly look at how the category has been moving, which are the customers who are considering us, who are not considering us. So it's a continuous journey. And the new products will be based on this journey. So that we will invest and we will come up with more and more new products.
Understood. All the best, sir, for the season. Thank you so much.
Thank you. Thank you.
Thank you. The next question is from the line of Rajat Chandak from ICICI Prudential Mutual Fund. Please go ahead.
Good afternoon, everybody, and thank you so much for taking my question. I have 2-3 questions, a couple of them more clarification. Sir, you mentioned that import content is, close to 14%. That is as a percentage of sales, and is it including the indirect and direct imports, everything? Just to clarify.
This is a percentage on the material cost. It's not on sales.
Okay. Yeah. And this is including indirect and direct imports, total?
Yeah, total.
Okay. Thank you. And on forex hedging, once again, I heard that we hedge only the net forex exposure, but that is again for, let's say, next 3 months, next 6 months, next 1 year, if you can throw some light on that?
Yeah, next 3 months.
Okay. And lastly, on the domestic market in terms of pricing, any light on what kind of price increases we would have taken in H1 and any further price increase in October or...
See, the price increase...
Going ahead.
Yeah, the price increase is a constant journey. We look at how much is the opportunity. Because at the end of the day, there has been material cost increases this year in Q1 and Q2. Q1 we have taken 0.6% price increase. Q2 we have taken 0.6 and Q1 we have taken 0.5.
Okay.
So we will very, very closely look at the market and we look at the opportunity, and then this is a decision we will continuously be reviewing.
And anything so far in this quarter, like October, in terms of pricing actions?
We have taken October, I think we have taken a small price increase. I think average price increase of about I think about 250 to 300 rupees average we have taken up prices in October.
Okay.
Immediately I'm not able to convert it into percentage, but across all models we have taken up the price.
No, that's good enough. That's definitely helpful. Okay. Thank you, sir, and all the best. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ruchit Mehta from SBI Mutual Fund. Please go ahead.
Yeah, just a couple of questions. One is that could you give me what was the realized FX rate in quarter 2 and what that was in quarter 1?
What is realized?
For FX rate, rupee dollar range.
It's around, the first quarter was 67 and second quarter was 69. 69.5.
69.5, okay, fair. And second is that just on the scooter side, given where petrol prices are and the lower mileage that typically exists for scooters vis-a-vis motorcycles, do you see some shift away from a scooter consumer to a motorcycle?
See, olden scooters to current scooters, the difference in fuel efficiency between a commuter motorcycle and scooters have significantly come down. This is point number one. Number two, scooters have got some unique advantages, especially convenience, multi-use, and more customer-friendly for the urban market. So, I don't think significantly, already we are at 33% category share in scooters. So, suddenly the base volumes of scooters have also gone up. And please understand, when somebody discounts the brand hugely, there will be some short-term impact. That's what we have seen. So, scooters will come back because it has got its own benefit to the consumer, especially in the urban market.
Okay. Thanks.
Thank you. The next question is from the line of Hitesh Goyal from Kotak Securities. Please go ahead.
Thanks for taking my question, sir. So there's some news flow which is going on that in this era, there's 15 to 20% drop in industry sales. Do you have any figures for this era sales for yourself or for the industry?
We have started with moderate growth. I don't know about the industry growth and I don't want to comment on that. But definitely the insurance confusion, one is the increase and the confusion it created in the first 3 weeks of September. As I explained, the third-party insurance is 5 years now. That is almost, in certain products, it is almost 10% of the ex-showroom price, especially in the entry-level product. Definitely that is affecting the market. But if you look at it, after that we had the accident which was 5 years and it was brought down to 1 year. So there were a lot of confusion. Now, all those are over. So we are hoping that definitely, and season has just started. Okay, so the major part of the festive season is yet to come, and with the kind of product portfolio what we have with ES Moped and Jupiter Grande and Radeon and Ntorq and Apache 4V, we are confident that we will do well.
And sir, your second point was on this Ind AS change that you're talking about, this interest income part. Is there a change in the accounting norms in this quarter? Because Ind AS has been implemented long back, and we have not seen this kind of change in accounting by any other companies. Everybody's taking interest income in the other income. So can you please clarify this?
No, this is India is 115 clarifications where any income arising out of a contract with the customer is forming part of a revenue from operations. And therefore, this has been done strictly in line with the accounting standards.
So this came in this quarter, is it? The clarification?
Yeah, the clarification came very recently and we took a decision now.
Okay. And finally, sir, on the rural sales, we have been hearing that there's some issue in rural, demand, which has happened recently. Can you give us some sense on what was the rural growth in this quarter and what is your outlook? Especially on the moped I wanted to.
I think rural continues to grow. Only challenge is because this year the monsoon has been good and the reservoir levels are reasonably good in most of the market, and there is a policy support on agricultural that has been good. The insurance increase is what creating the confusion, and definitely in rural market entry-level products there is a huge headwind because of the insurance increase, it is a steep increase. So otherwise, I think now that things are looking stable, I think going forward it should stabilize and it should continue to grow.
Thank you. The next question is on the line of Kunjan Pratyani from JP Morgan. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. 2 questions from my side. Firstly, on the scooter, your Ntorq of course has done very well, but Jupiter has been seeing some kind of tapering. So is this a cannibalization that you're seeing across market that 125cc will grow and the base segment will see saturation at these levels? Can you share some thoughts on this? And also on Ntorq, I recall that you shared 20,000 unit run rate as the initial target. Given the way the product has done, how much do you think that this can scale up to?
I think scooter sales for TVS Motor has grown much better than the industry. Industry has got a little bit of problem, but we have been growing at 18%. And in H1, if you look at it, we have grown 15.4% as against industry growth of 6.5%. Okay, last time also I told you a product like Jupiter and when you have a product like Ntorq, okay, first 1 or 2 months, when you look at such a product, some of the customers who look at the new product, that too with the connected technology, there is a chance that they will look at the product. But a core Jupiter customer will never move into Ntorq because Ntorq is very clearly positioned for young customers, youthful customers. So we are very clear, and as long as overall growth, okay, and Jupiter has been a very stable brand and it has done extremely well. So both Jupiter as well as Ntorq has contributed in the growth. While the industry has not grown, please understand this has stood and it has grown much ahead of the industry. Now, coming back to Ntorq 20,000, I think that was the target we set for Q4. We are extremely happy that it's happening now. And whatever is the capacity demand that we constantly review and keep investing behind the capacity. And today, supply chain and inside capacity, we can set it right in 3 months' time. That is a regular journey we'll always look at.
So going forward, this could be 25,000 units a month is what you stated. Is that your target for the next quarter?
I don't want to give a number. We will make sure that Ntorq becomes yet another hit product in the list of our brands, whatever we have.
Thank you. The next question is from the line of Ameen Pirani from Deutsche Bank. Please go ahead.
Yes, hi. Thanks for the opportunity. Most of my questions have been answered. I just going back to the change in the revenue accounting. So this interest income arising out of contract with customer, is it an interest income on the security deposit or so what is the interest income on actually? Just wanted clarification on that.
Let me explain. It is strictly in line with the accounting standard requirement reclassification has been done. Any income arising out of a contract with a customer, the India very clearly says that it has to be part of the revenue from operations. That's what we have done.
Okay. I understand that. I was just wondering that, so in this case, this is interest arising out of, say, booking amounts. Is that kind of a number, or is it like dealer advances? If you can...
It's a combination of dealer advance and also the facility extended. It's a combination. Any contract with the customer which is inextricably connected with the business is to be treated as revenue from operations.
Okay. And you mentioned that retail finance penetration is around 43-45% for you now. What was this number, say, last year in FY18?
It's very similar.
Okay. So your retail finance penetration it would be higher than the industry. Is that a correct understanding?
No, I think industry will be almost similar. I think if you look at industry, every company will be having a retail finance penetration of about close to 40-43%, 45%. I think varies from company to company, but it will be on the same kind of range.
And the TVS Credit Services is growing, and in every opportunity they will only use that, and their book size is growing. They will step in case of any opportunity available for retail funding.
And is there a intentional push by the company to increase this share to say, I don't know, maybe 50 or higher, or is it like it just depends on what the customer wants, or is there an intention to push this to drive demand?
It is also it is based on the customer requirement. Okay, there is no target set to it. I think we will make sure that every dealer and every sub-dealer will have this facility. So that expansion is a continuous journey,
And it's a customer's choice. I don't think we can push that.
Thank you. The next question is from the line of Priya Ranjan.
We may use it for softening the insurance pressure on the customer.
Understood, sir. Thank you.
Thank you. The next question is from the line of Priya Ranjan from Antique. Please go ahead.
Yeah, thanks for taking my question. A couple of questions. One is on your cost-saving programs and value engineering and value addition, etc. So do you have some kind of target? I mean, what kind of quantum we want to save it from these cost programs, etc.? And second part is on the demand side, regional dichotomy in terms of demand. So do you see, I mean, some segments, some areas like region like West or East having very different demand trajectory? Again, on demand side, what is the outlook on the West Bengal after the recent disruption there? So that's all.
See, if you look at, we don't give region-based demand classification of how it is moving up or down. Overall, if you look at it, in Q1 we have seen there was pressure in the entry level primarily because of discounting, huge discounting by some of the competition. In Q2, unfortunately, because of the insurance increase, we find that there is again a pressure on the entry level. Okay, so these are two important areas. Another important thing is West Bengal. We had some challenges, but it has opened now. We are hoping that this will continue smoothly from November 15th also. So the business has started in West Bengal.
Thank you. The next question is from the line of Abhishek Salunke from Trivikram Consultancy. Please go ahead.
Thank you for taking my question. My question is on the capacities front. So currently we are having a capacity of producing 4 million two-wheelers and 1,20,000 three-wheelers. So correct me if I'm wrong. As of FY18, we were at a rate of more than 80% utilization. So what are the expansion plans, like till when it will be completed and the cost of expansion, and by how much the capacities would be expanded?
Yeah, we have 5 million capacity as of now, and capacity expansion is not a big challenge primarily because suppliers and our plant, we can do that in 3 to 4 months' time.
Okay.
Did you ask for the CapEx? You asked for the CapEx?
Yeah.
Yeah, CapEx is around 800 crores for this year.
And it would be for?
Including the new product, everything put together.
Okay, multiple things. And my last question would be on the EBITDA margin side. So, provided all the situation is normal, what would be the sustainable EBITDA margin going forward for the business?
We will continuously grow. We don't want to give a guidance on EBITDA margins, but we will continuously focus on that because many initiatives we have put in terms of growing revenue ahead of the industry, having a good portfolio of very good brands, growing the export ahead of the industry again, and systematic initiatives on cost reduction in terms of localization, in terms of VAVE, in terms of scale benefits. So overall put together, we are confident that the EBITDA margins will continue to grow.
Thank you. The next question is from the line of Krishna Kumar from Sundaram Mutual Fund. Please go ahead.
Hi, sir. This is Shyam Sundar Sriram from Sundaram Mutual Fund. Thanks for the opportunity, sir. My question is on the economy and the executive segments where we seem to be losing some market share. Happy to hear of the good acceptance of Radeon. Other than that, are we seeing more white spaces that can help us stem this loss of share?
We had a big opportunity through Radeon. That is why we have launched, and looking at these white spaces is a regular work because as the market matures and as it grows, you will be able to see many areas where we can come up with either variants or new products, and that is a continuous journey.
Okay. Sir, there's just one more question on our export revenues for this quarter, the actual amount.
Export amount.
Export sales constitutes around 23%, and value-wise, it's around 1,140 crores.
Okay, sir. Thank you.
So this can be the last question.
Sure, thank you. We take the next question. That is from the line of Kumar Rakesh from PNB Paribas. Please go ahead.
Hi, good afternoon. Thank you for giving me the opportunity. My first question is around the festival demand so far. So in the 2 weeks since Dussehra, which we have seen, two-wheeler demand seems to be, the retail demand seems to be down by around 13%. But moped demand seems to be down by significantly high 20s, 28, 30% down. So are you seeing some structural shift happening over there in the moped demand, especially after recent increases, or this is just a blip which we are seeing?
First of all, I don't want to comment on whatever numbers you said on the decline in the demand. Okay. Definitely, overall, given the kind of portfolio what TVS has got, we had a start has been moderate, the season start, but we are confident with the kind of product range. We will do very well because most of the season is yet to come. Diwali season is yet to come, number one. Number two, definitely this increase in insurance and the confusion it created in the first 3 weeks of September, again, there were a lot of impact due to that. And the third point, that this insurance also is affecting more in the entry level. That is also a fact. So the entry level products, including moped, including commuter motorcycles, this is affecting. So given the product portfolio like electric start, moped, and Radeon, Jupiter, Grande, Ntorq, 160 Apache, and all the other refreshers, we are pretty confident that season will do well, and we will continue to grow ahead of the market.
Okay, thank you. That's helpful. My second question was about the quarterly performance. So when I'm looking at your gross profit margin, for the last 2 quarters, it has been declining on a YOY basis by more than 200 basis points. So apart from the usual commodity pressure, is there anything more than that which you are seeing on your gross profit which is impacting higher customer acquisition cost, or you're not able to pass on all the price hikes which you intend to?
Are you asking between last year Q2 to this year Q2?
Yes. The first quarter and second quarter of this fiscal year, the gross margin has declined by more than 200 basis points YOY. So what is beyond commodity which is impacting that? And
last year to this year, if you compare Q2 to Q2, I explained last year Q2 had the entire season billing. This year it is between this quarter and the next quarter. That is Q2 and Q3. Second one, last year Q2 to this year Q2, last year the material cost increases this year plus the BCD increase are affected this year.
Okay, so because in this quarter you still had around...
And also, basically you wanted to highlight that last year Q2...
Yeah, last year Q2, if we restate for the freight cost increases for the accounting standard, it should be read as 74.8%, and the difference is now 75.7 and 74.8, and not 75.7 and 73.2. It has to be read as 74.8 if the accounting standard implication is given effect to.
Okay. Okay. So you're not seeing anything beyond these in the market environment in which you are... your cost of acquisition being higher or your price increase is not reflective enough?
No.
Okay. Thanks.
Thank you. Ladies and gentlemen, due to time constraints, that would be the last question. I now hand the conference over to Mr. Chirag Jain for closing comments. Thank you, and over to you, sir.
So, I just wanted to conclude, first of all, thanks to everyone. I just wanted to highlight that TVS will continue to deliver superior value to all our customers. Last 3 years we have won, as you know, JD Power, customer satisfaction in service. All our products are extremely doing well in appeal score, and we have grown in all categories. If you look at this Q1 and Q2 put together, international market is continuing to grow, and most importantly, our EBITDA will continue to grow. And one marker I wanted to leave it to all of you is that if you look at 2012-13 to 2017-18, our profit after tax has grown from 115 crores to 663 crores. Our EPS has grown from 2.44 to 13.95. Okay, thank you very much.
Thank you, everyone. On behalf of SBI Cap Securities, we would like to thank TVS Motor for providing this opportunity to host the call. And special thanks to Mr. K. N. Radhakrishnan and Mr. Gopala K. Desikan for taking time out for the call. Thank you again and have a good day.